Welcome to the webinar for Bond Property. My name is Tim Eisenhower. I work for On Market. We're a licensed investment platform, and we're helping Bond Property with their crowdsourced funding campaign. The agenda for today, we're probably going to go for anywhere between 50 minutes to 60 minutes. Part one really is just providing some details about the Bond Property campaign. Introduce Bill and Rex, who you can see on screen from Bond Property. They're going to give a short overview presentation about the company and about the opportunity, about why they're raising money and what they're going to do with the money. We're then going to throw to, I guess, the primary part of the call is in relation to your questions, the questions from the crowd, and you'll be able to, through the Q&A portal there, put your questions in. I can then facilitate those questions to Bill and Rex. But firstly, let me talk about the opportunity. Bond Property. It's a fast-growing, it's tech-enabled national conveyancing firm designed around mortgage brokers and agents. They're looking to raise $3 million from this crowdsource funding campaign. So it is a crowdsource campaign, and we'll get into a little bit around that and some of the limitations and rules around that. The campaign currently is in what we call the expression of interest phase, where they have received over and growing on a daily basis, 430 investors so far wanting to buy shares in the campaign. The campaign opens for investment, so it's investing period, next Tuesday, August 19, sort of around mid-morning. And the most important thing here is you want to be expressing your interest, if you haven't done that already, via the On Market portal, onmarket.com.au. So you get that email that comes out to you. For those that are registered interest, will get an email next Tuesday morning. Remembering, just from a crowdfunding standpoint, if you're a retail investor, there's a limitation of $10,000, a cap, if you like. If you want to invest more than $10,000, you need to be a sophisticated investor with an accountant certificate. I'd now like to introduce Bill and Rex, who you can see on screen. Both are co-founders of Bond Property. We've really enjoyed working with these guys. They are the real deal, just in relation to what they've created and what they want to do with the money. Bill is experienced in starting and exiting tech firms and pure play tech companies. In 2008, he sold a real estate research firm to an ASX-listed property platform. He then went on to become a CEO and MD of that firm, conducting a change management process that led to up to 500% increase in their share price at the peak. He then worked for PropTech Group, ASX code PTG, where he was a COO and Chief Revenue Officer, leading to 100% plus year-on-year growth, helping that company's value increase by over 300% before it was exited to a private equity company for over $100 million. A really nice exit, and we'll get into some of the liquidity opportunities here for Bond Property. Rex is a nationally recognised lawyer for mortgage brokers and real estate agents for over 20 years. Very well known in the real estate law sector. Judge for many national industry awards for mortgage brokers and real estate agents, and recognised by numerous publications, including Forbes magazine or Forbes Australia, as a go-to lawyer for real estate agents across Australia. So after those very glamorous bios for you guys, I'd like to hand on to you to talk about what investors want to see and what you guys want to do, and we'll come back after that. And please, while the guys are going through sort of the presentation, please, in the portal for Q&A, just drop in your questions, and we'll get to that when these guys finish. So over to you and Bill and Rex.
Thank you so much, Tim. Great introduction. I feel honoured. I might start first. I'm the lawyer, so I'll try to be quick if I can. Don't judge me for being a lawyer. As Tim mentioned, I'm a lawyer for real estate agents and mortgage brokers, so I get a first-hand deep dive into their business. I'm a judge for their national awards as well. All real estate agents across Australia and mortgage brokers across Australia need a conveyancer, a property lawyer, to be able to transact. Without the property lawyer, they can't get the deal done. with that, there's about 600,000 plus transactions in just residential properties across Australia. And each one of those transactions require not one, but two conveyances. So it's a big industry. It's valued at about $2.2 plus billion. And despite that, there is no dominant national player in this industry until Bond arrived. Bond's been 2 years old and it's been specifically built for this. If you think of other industries, so for example, real estate, you got the Ray Whites that have a 15, 20% market share, you got Harcourts, pharmacy, you've got Chemist Warehouse, every other industry has a market leader. What we've purposely built with Bond is to get a dominant play in the conveyancing industry. And that's why we got Bill involved, I suppose. Bill, if you want to go to the next slide.
Yeah, and just to touch on that as well, we built this from scratch, from day one, to be a scalable solution. We didn't build it to be a small suburban firm. Everything that we've done from the first day, so all the technology build, all the solutions that we've built are being to be a scalable solution.
So this is the current problems the conveyancing industry has. There's no national player. So and often people buy properties across Australia and mortgage brokers work across Australia. They can't go to one firm to service all their needs. Large franchise groups in real estate or large mortgage aggregators in mortgage broking can't have one partner. Their preference is to have one partner that can work with them and that can integrate into their systems to make the flow and the communication easier, but there hasn't been that solution for them. And this is when I kind of just working within the industry, working with these people on a day in, day out basis for 20 years, I found that opportunity. And I've known Bill, I've been Bill's lawyer for many years. From when he first sold, he was 26 when he sold his third business at the time, and it was a long time ago now, it doesn't look his age, to a public listed company called iBuyNew. And he then became the CEO of iBuyNew and sold that for 500 multiple, then went to another ASX listed company. And Tim's giving me a background. So I know he had not just the connections within that ASX world, but he knew how to scale a business. So we approached Bill back then, 2 years ago, to start something special, unique. I call it my legacy piece.
Yeah, and just to touch on that, on the problem, one thing that we realized when we were doing research on what we're going to build here from a technology standpoint, but also from a process standpoint, is there's a massive blind spot for real estate agents and mortgage brokers. So first of all, real estate agents and mortgage brokers give conveyancing firms most of their clients. So they're a big partner. But the minute they get a file from their real estate agent or mortgage broker, they provide very little in terms of transparency, especially when they get busy, and all conveyancers are always very busy. And they're not returning phone calls, they're not updating them in real time. And there's a massive blind spot from the day they provide a contract to a conveyancer through to settlement. So that's the big solution that we wanted to solve, because we knew if we could solve that problem for real estate agents and mortgage brokers, especially at the enterprise level, and we'll talk about that in a moment, but we knew that there's going to be a massive opportunity for us to win market share very, very quickly. So on that, so first of all, the first thing that we wanted to do is we wanted to build transparency into the visibility of the file, not just for the end user, the client, but also for the mortgage broker and the real estate agent. And what we found was if we can provide better transparency to all the key stakeholders in the transaction, then they're going to provide a better level of service to the client. So while our solution provides a better level of service to the end buyer or seller of real estate, yes, we've improved the level of service that they're getting. And our net promoter score, our customer surveys are at 150% plus higher than the industry average. But more importantly, what we've done is we've provided a better level of service and transparency to the real estate agents and mortgage brokers, and then they can provide a better solution to the client. Little things like a settlement date's changed, or even a settlement time has changed. That's very important for a mortgage broker. Just being able to communicate that in real time to them has made a very big difference. And when you're going to a mortgage aggregation group, these big, 4,000, 3,000 mortgage brokers or big franchise groups of real estate, and you can build a solution for them through technology, but also through our processes to provide that transparency and that data. It's very, very compelling for them. So to give you an example, for our big mortgage broking partners, not only do we make it very easy for them to submit a client to us, and have a very good sales methodology on the back end. We've built very complex sequences and systems on the back end where we're converting leads at a much higher rate than your average conveyancing firm. But also what we're doing is we're pushing back a lot of that key information into their core systems. So we're not making them log into another piece of software. We're pushing the key information, you know, all the updates that they need, both from us and from PEXA, which is very important to mortgage brokers and real estate agents in the room today. You'll know. We can push that directly in real time back into their system. So all the software that we build is API first. And through webhooks and APIs, we push that information straight back into their systems in real time. So they know what's going on at the same time as the client does. And that gives them the opportunity to fix any problems that occur, you know, solve a solution so that they're providing better levels of service to their clients and hopefully getting more business on the back end. The other part of, I guess, you know, although we're technology first in everything that we do, because we started from scratch, we got to, I guess, consider all the things that are important to real estate agents and mortgage brokers, as well as the end client, and build those processes. So, for instance, we knew mortgage brokers, every time the client wanted to buy a property, they recommend that their client should get a contract review. So the contract of sale, when they're buying a property, should get reviewed by a lawyer. We provide free contract reviews. It's one of our biggest business development tools. So we provide those within 24 to 48 hours. For sellers of real estate that are very important to real estate agents, of course, we provide a 2-day turnaround for the production of new contracts of sale. So when they go to sell a property, we build those contracts within 2 days, subject to searches, which we have no control of if there's a search that takes longer to come back. The other thing that we provide is, because we've got a very systemized sales methodology through my background in revenue, every lead gets contacted, new lead that comes to us gets contacted. We've got a standard lead time of about 2 hours, but we're under 30 minutes, I think, at the moment, Rex.
32.
Under 30 minutes to get to those new leads now as well. So we're converting at much higher rates than your average conveyancing firm, where the lead's either going to a junior, you know, an assistant, or to a conveyancer, and they're not the best people to convert new leads, especially considering how busy they are on a day-to-day basis.
Oh, sorry.
Yeah, just to finish off on that, I think one thing that people don't realize about the technology journey in legal tech, and when Rex first approached me, he said to me, "Look, legal tech's so far behind prop tech and fintech." And when I looked at the software that's out there, it really is. It is ancient. You know, lawyers historically are very sort of paper driven. You know, very offline. So when PEXA came in, and that's the settlement part of the process, that's had billions of dollars invested into them and a lot of great tech built that's changed the industry. We wouldn't be here today without PEXA. But a lot of people think about PEXA and they think, oh, there's been a lot of money invested in the conveyancing industry. But the fact is that PEXA only takes care of the last 2, maybe 3 weeks of the process. And there's a 4-6 week process before that where there's no visibility into the transaction at all. And that's where we've come in and built our technology and our processes around that.
And we've had good traction. So the firm, as I said, from startup, it's been 2 and a bit years now into it, and going from zero. Every month is a new record month for us. Our July, which is normally a quiet month because it's winter, it's not a busy month where people are selling property, was a record month for us. If you take our revenue from July and multiply by 12, it was a $4.2 million revenue business. If you look at June, multiply by 12, it was 3.9 million. So every month it goes up. And again, July, August is going to beat both of them again. And it's always these are the quieter months. September onwards is when it's going to peak again for us. We've had some great traction also with some corporate accounts. So we're trying to get national corporate accounts, which we've secured. One that will be announced shortly is AFG, Australian Financial Group. It's the second largest mortgage aggregator in Australia. Every mortgage broker in Australia works underneath an aggregator. AFG is the second largest across Australia. They've got 4,000 brokers that work with them. We're going to be integrated into their system as of October. And every time a mortgage broker is filling out a questionnaire, a client intake questionnaire, there's going to be a question inbuilt in there. Do you have a conveyancer? And if they say tick no, that lead automatically comes to us. We've got a sophisticated tech piece that communicates with them, and then we've got a great sales team, a client concierge team that calls them with a proven script to convert that lead into action. So this is already in place. We've already got with AFG, we've already got one agency. The agency is another public listed company is about to go live with us as well. And there's deep conversations with a number of other national brands in aggregation and real estate, mortgage aggregation and real estate, to onboard them as well.
Yeah, and just to touch on that as well, there's multiple conversations that have progressed that aren't as progressed as the ones we just mentioned. So we can't really talk about them here today, but they're very, very deeply progressed. And there's one specific relationship that, along with AFG, together they make up about 12% of all property transactions in Australia, and we're talking about 6,000 plus settlements per month. So we've got the relationships are there. We'll continue to build them, but really where we're at now in terms from a traction perspective is we've been proven to execute based on our strategy so far, and we're really going to that next level of scale now, where we're going to execute even further. And just one of the things that we talked about earlier a little bit was, we really built this whole model around the enterprise accounts, these big accounts. There's companies that are bigger than us in conveyancing, of course, that have been around for 10 years plus. None of them have these large corporate accounts that we've been able to win. And the reason we've been able to win them is multiple reasons. But first of all, Rex and I both have deep relationships with the heads of these groups for a very, very long time. We've partnered with them in other businesses. So we know them very well, and we know, more importantly, no one does favors for you in this world, but more importantly, we know what they want, and we know what we need to deliver to be a solution that's going to bring value back to them. And the real value that we find that we're able to provide back to AFG and others is that information flow back into their broker network and back into their real estate network, so they can improve their level of service. And that's what they're about. How can they help their members improve their level of service? And we're giving them some really important information that's going to help them provide a better level of service to the client, better experience for the client as well.
Exit. So we have a touch base on exits. I think it might be useful.
Yeah. So I've exited a number of businesses before. So some of them, my theory has always been build really great businesses that perform well and are profitable, and then worry about exits later. But this industry in bond conveyancing has such a big opportunity for an exit in various different ways, because as Rex mentioned before, there is no national player. And it's certain, almost certain, that there will be a consolidation in the conveyancing industry. Someone is going to buy a bunch of the competitors and make a market leader with 10, 15, 20%. We think we are very well positioned to be that market leader, to acquire the other companies that we need to acquire, the ones that we want, and build through organically like we have been so far. Everything we've done so far is organic. We've not had any investor funding at all. And we believe that with the strategy that we've got now, that we could be that major player. And what that looks like in 3 to 4 years' time is potentially an exit to private equity. These services businesses can become very profitable. But also, there is an exit strategy that sort of probably, if we're going to make lots of acquisitions, looks very likely the way out of here is through an IPO in about 3 or so years' time. Because really good access to funding when you get into the listed environment, and getting, if we're 10, 12% market share at that point, getting up to 20, 25% would be best suited to be in that kind of environment. And it also give an opportunity for the long-term investors in our business to exit as well if they wanted to at that time. I guess there is one other opportunity very much earlier than that 2 or 3 year time frame for private equity or listing on the ASX, and that's a trade sale or a strategic sale. And we've already had a number of our competitors reach out to us and open discussions. So, it would have to be a fantastic offer, at multiples of the price we're raising at. But if an offer comes in that was very, very good in the next 6 months to 2 years, we would definitely, come back to our shareholders for a vote on that as well. And look, we're very likely to get an offer in that period. Whether we believe it's one that's going to be suited to us and our shareholders would be a different story. But there's multiple exit opportunities. And, I've been doing this for a while now, and I've never seen an industry that's so ripe for disruption and consolidation as conveyancing. That's it from us, Tim.
You're on mute, Tim.
Excellent, guys. Quite comprehensive. A lot of questions coming in, and I'll start to just talk about those questions for you. One of those really is in relation to why it's taken so long for someone to see sort of that the market, as you were talking about, Bill, is ripe for disruption. Why has it taken that long, and how are you guys sort of really primed in that legal tech space to make such a difference?
I think I might start with that because I'm the lawyer, I suppose. Lawyers are so busy. We don't have the time to build the tech out. And if it wasn't for Bill, I don't think we would be here, truthfully. We're busy. We can do the work really well. But the infrastructure that Bill's helped build, not just the technology piece, but the sales processes. You know, we have automated messages that go out. We have a sales team that converts those and a scripted sales team that really is well scripted to convert. That is not what a lawyer can do.
Yeah.
Yeah, I think you know, Tim. One of the things that strikes me about this business is, you know, it's a pretty boring business, which not a lot of it's not super sexy conveyancing, and the big M&A players that do these kind of roll ups just haven't really warmed to it. But I can tell you, the last 2 or 3 years that has changed. You know, even when I was at PropTech Group, our executive team was discussing this kind of thing, and it is on the radar now. There's some big funds out there that are looking at this space. But yeah, certainly, I think just it hasn't been a major thing because I think lawyers by nature, it's an afterthought conveyancing typically.
Yeah. A lot of questions coming in relation to your partners and your distribution strategy. I'll come to those. About liquidity, which you mentioned, your revenue model, and also just in relation to you know, the cost of what you're doing and your profitability and your margin. So I'll just run through a couple here. Can you describe your tech stack that enables operations? You know, what you put together there, Bill?
Yeah, sure. So to run a conveyancing file, you have to use specific conveyancing software for trust accounting and other important sort of legal reasons. So we've got a conveyancing platform that we use with the conveyancers. And then the sales team uses a very tailored HubSpot instance. So we run those two systems separately. And then we've built some proprietary software in the middle directly from our tech team, which is API first, that brings all that information together and sets up a lot of the automations. So our proprietary software is a differentiator, and the automations that we can provide from that have made our conveyancing team much more efficient. So, you know, the average conveyancer, Rex, does about 20.
The average conveyancer does 20, 25 files a month, depending on the experience. But through our tech stack, and we use some VAs as well to help with some of the basic work that they can delegate to, our conveyancers do 40 to 50 files a month.
Okay, so putting that into, and there's questions here around competition. I had some questions around competition as well. How does that compare to who are your competitors in this fragmented market, and how does that sort of legal tech, that tech that you put together, you know, what are they offering compared to what you're doing?
Our biggest competitor is a company called Deep Blue Company. They've raised about $100 million and have got 3 brands: conveyancing.com.au, they've got First Class Legal, and they've got Buy the Rules. So there's 3 companies they've purchased for a lot of money. They're a B2C. They don't have any national contracts. They're not a national firm. They're not in certain states. They're in a few states, mainly across the East Coast, but not national. They're probably the biggest player. They do about 3,000 settlements a month. But again, that's on just client work. They spend a lot of money on advertising and the like.
Yeah, I think there's some great competitors in this space. There's no doubt. You know, Settle Easy, Dot and Crossit, Law Lab. There's a few that are sort of maybe similar, a little bit bigger than us right now. No one that's growing at the rates that we're growing, and a lot of them have been. I can't think of one of them that's been in business less than 5 or 6 years. We're 2.5 years in, and as big as them. I think importantly, when it comes to competitors as well, a lot of these guys have raised quite a bit of capital. We've raised no capital so far, bootstrapped. Net profit last year was positive. We're doing this in a very strategic way. We understand how to run businesses from a financial perspective, and we're not blowing money on things that aren't important.
Yeah. Good answers. In relation to, you're in expression of interest phase, you've had 430 plus people on the register. Who are you seeing sort of as people? You can see that list, obviously, so can we. You know a lot of them. What type of people are coming in on that list, and what do you think will happen sort of when you go live next Tuesday, Rex?
What I love about this is our referral partners, the ones that have supported us to date, are now have registered their EOIs, expression of interest, to become partners with us, which shows that support of what we're doing. Also, our employees, almost all our employees have expressed their expression of interest into it as well. And that's again lovely, because now they've got a vested interest in our own business, in our joint business, to grow with us. But also lawyers. I think lawyers can see.
Surprising one.
Yeah, it was very surprising to see how many lawyers have expressed their interest in this. And we're not talking small amounts. We're talking some large amounts from lawyers that I think they know, they can see firsthand what's in the marketplace. And they've expressed a lot of interest in this.
Okay, just on those referral partners, a lot of questions about them. Do you pay them a referral fee? Can you talk about a little bit about that model of how you pitch them, why they like you guys and go with you guys, and go in exclusive contracts with them? How long do they last for? Just a little bit of intel and drill down. I've got about 25 questions here, and
we'll try and answer quickly.
Not all on referral partners. A quarter of them will be on referral partners. Just that relationship, because that is your point of difference. And Bill, as the numbers man, if you were to scale, and you are to scale, and you're bringing these guys on, what does that look like from a revenue standpoint? And then maybe Rex, there's a question here in relation to, if you do scale so quickly, what does that mean for just your staff, and exactly how do they handle? The question is, how is the team scaled to handle an increase in volume?
Great question, actually.
Great questions, both of them.
A couple of different questions all thrown to you, so it's a bit of a mosh pit, but
that's all right. We got it. I've made a mental note. So first of all, in some states you can pay fees, in other states you can't. So we abide by those rules. Secondly, there is firms that pay a lot more than us, significantly more than us per transaction. Where we can, we'll pay a small fee. But really, the reason people use us, like I said, there's a local firms that will pay way more than us, is the transparency of information. That's the number one reason. We started 2.5 years ago, whatever. From an SMB standpoint, we went for small businesses because we wanted to test the model. But we always knew that the big play here, where we could make a real difference, is in the enterprise space. So there's big firms. And they're the ones that we're getting the most cut through from. And if you think about going into a local real estate agent, the amount of work it gets to get them to send you a referral, there's probably a little bit more work to get a corporate account going, but not substantially amount more. And the great thing about the big enterprise accounts is that we've built a model where it's almost product led. So we don't have to spend multiple amounts of money on the sales method, on the sales systems, so extra BDMs or extra salespeople to get them more sales. Because we've built tech integrations into their core systems, the lead comes through us automatically. We're not relying on a mortgage broker or a real estate agent to say use Bond. It's an automated system, and if they say use Bond, it's even better. But we don't rely on them to do so.
Can I just add to that too? It's a simple question for mortgage brokers. So if a lead automatically comes to us, when we call them, it's, do you need your contract review for free? The conversion rate on that is so high, because if someone's buying a property, generally they should get their contract reviewed and they should know what they're buying. Because even if you're a seasoned veteran, you bought multiple properties, every property is unique, and you should get a lawyer to look at that and review it. And we're offering this free service to them that converts 90% of the time.
A couple of questions here on the user journey. What am I seeing as say the mortgage broker or the agent or the vendor or the purchaser? What am I seeing that I wouldn't be seeing if I went through another conveyancing company? Because you were talking about that, Bill, that look through that you're getting. What is that user journey? And what am I seeing?
If anyone's been to our website, you'll see our tagline, which is technology enabled, but people first. So we try and use technology everywhere. We use technology a lot, and we give the clients the opportunity to use technology a lot, but they don't have to. We can do it for them. So I'll give you just, it's hard to run through the whole user journey in a couple of minutes, but I'll give you an example of one thing that I hated doing when I used to buy property. And that's when you first buy or sell a property, you have to fill out, the conveyancer sends you this PDF document with 100 questions. Half of them don't pertain to you because you're not buying in a trust, or it's not a strata title, or a bunch of other things. We've built this really simple decision tree bot that goes out to a client, and they say, are you buying in your personal name? Great, you'll never be asked for a company or anything else again. And it gives you really clear instructions about what everything means. And that process alone saves clients so much time and energy. And we've found that that's a really big game changer in terms of how we engage clients. We automate the way they give us their ID. A big part of the process is how we ID people. We automate a lot of that kind of thing. And then for the partners, I guess, we understand that the big enterprise groups, like we said, we push the data back into their systems. But the small companies, we've got our own portal, so a referral partner facing portal that they can log into. What we find is that if you're a local real estate agent or mortgage broker, you're probably never going to log into that portal because you're very busy. But your admin team loves it, right? So they're logging in, they're getting all that information in real time. And everything that happens in the portal also gets pushed through to the mortgage broker, real estate agent through email or text message if it's an urgent message. And one of the things, Tim, that we haven't talked about is a lot of our really key relationships are actually not directly with real estate agents and mortgage brokers, but also through property technology companies that service those sectors too.
Couple of questions here on AI and how you're integrating that into the platform either now or in the future.
Both. We're doing it both, truthfully.
Yeah.
Do you want to talk through that?
Yeah. So our head of technology, the technology advisor that runs our tech department, his name's Luke Pavard. He sold Eagle Software to PropTech Group when I was there. Very successful exit. And he is a very AI capable, AI first builder. Everything that we do, we think about how AI can help us. Right now, our technology has been focused on the referral partner and client, and our internal focus, trying to automate our systems. We have already scoped out the AI work that we want to do, and it's just not ready to be built yet because we've got other priorities. But there's probably two things that we'll do immediately that are not super complicated or hard to build. The first is we'll build an AI contract review tool that allows people to get contract reviews in real time. So, you need a contract review to buy a property, you're in a rush. The human will take 1 to 2 days, but you can get a preliminary version online immediately. The great thing is because we do so many transactions, we've got thousands of examples that we can feed into AI for it to learn. And the second part of it is just building out an AI tool on our portal or in our back end to help people find information quicker. So if you're a client, or more importantly, let's say you're a big real estate franchise group, you've got 1,000 mortgage real estate agents under there, and you wanted to find out what's going with Jim Jones's file in Smithfield. You could literally write Jim Jones Smithfield, when settlement date, and it'll come up with the document and the settlement time frame. So we're thinking about what can we do to make things easier for the consumer, because AI it's a great buzzword, but sometimes can be not super useful. We're just trying to find what is the most useful way to build it, and we're plugging in the relevant tools. I think for those technology people, obviously we're not building our own AI tool, where there's lots of great tools that you can integrate with already that are out there.
Okay. And then staying on tech for a moment, Bill, 3 questions here on the ID verification process and how you go about doing that.
Yeah, so there's already, again, existing tools out there. We're not here to reinvent everything. There's already existing tools out there. We automate the communication of those tools. Now, there's a lot of people that don't want to or don't feel confident in doing online reviews. So those people can literally walk into a post office. They get a code. They walk into a post office. But yeah, we've just automated the way that information is delivered. And then there's an online tool that we use that lets people do it on their mobile phone by taking pictures and uploading documents.
Okay, moving on to a couple of questions in and around revenue. An insight just into your cost of goods sold, what that looks like, and then potentially sort of a gross and net margin, just some numbers there, just to give people a feel for, what it costs to run your operation on a daily, monthly, annual basis.
Sure. So we're being EBITDA positive really literally by the third quarter, NPAT positive last year. The revenue for last year the financial year was about 2.5 million. But to give you an idea of the growth that we're experiencing, our run rate, last couple of months times 12 is 4.2 million. So that's growing rapidly, and every month is a new record, almost always. I think January might have been an exception for that, but pretty much every month is a new record for us. We're growing organically, so we've not acquired any companies yet, although we potentially will in the future. We've done that all organically. Our sales costs, and for anyone that's sort of in finance, for a company growing 100% year on year, to only spend 20% or 19% on sales and marketing is a pretty big win. We're very efficient in the way we get our sales and marketing done. Our gross profit is at about 65%, 65 to 69%. At the moment. So again, these services-based businesses, once at scale, can be very profitable.
can I just add to that? All of the numbers that Bill's talking about is with our current referral partners, which is 115. We're about to onboard thousands and thousands. Like
I was about
first
to ask
October
that.
is 3,000 new
Mm.
brokers from AFG. So
Yeah, what does that look? I was going to ask about that. What does that look like then in relation to the number of transactions per month?
they've had similar experiences, similar onboarding of other companies, and we've had it from 3 ASX companies have said the similar thing, that you should expect in the first 12 months a 25% conversion rate. So 25% of what they do converts. By this time next year, we're very confident we'll have probably about the market of 6,000 settlements, but if we convert 25% of that, it's 1,500 settlements plus our organic growth now, which is 300 settlements. You're looking at 1,500 to 2,000 settlements per month at an average cost of $1,700 per settlement. You're looking at $2.5-3 million in revenue a month.
Yeah, and
Okay.
obviously,
How
can I just make a point here that we've still got to execute on this, and that's a big part of what we're doing today, and the reason we're raising this capital. But this data is data that's been given to us. You get 25% cut through within 12 to 18 months on the network, and the basic math is the math that Rex did there, and we're very confident with. I've done this before. B2B to C is kind of my bag. I understand how to engage these groups, and we've done this before, and we know what we'll do out of this. And I think within 12 to 18 months, that's a realistic time frame that we'll get that kind of cut through, especially because we're building this tech integration, and we don't have to knock on the door with BDMs for every single mortgage broker.
Yeah.
And it's a necessity. They need us. It's not a service that they can't.
Nice to have. Yeah, it's not a nice to have.
Yeah. Question here on why crowdfunding, not VC or PE? You're probably a bit early for PE, but why sort of go to the crowd? I know with crowdfunding, you can have high net worths, you can have institutional or VCs come in via the crowdfunding, but the crowd's interested in knowing why you're offering them shares.
I'm a big fan of what we're doing. It gives all the people that have supported us, our employees, our receptionists is jumping on. Everyone that's within the business is now going to be a shareholder and an owner of our business, including our referral partners. That to me means a lot because, I'm going to have loyalty from them from a long time.
Yeah, I've got to say, Tim, and you know this from our meetings, but I was initially skeptical. I've raised capital a number of times, never done it this way. Didn't even know really this existed, this form. But I mean, it's been a really, really good experience because as Rex said, we've been able to get much smaller parcels than you would typically. So your referral partners who if they're part of your business, they're going to support you even more. Your staff. It's been other lawyers, which is great to see. And what's really interesting is that there's a lot of like M&A opportunities that have come up out of this as well, where people want to invest in us, but then want to talk about potentially looking at their business as well, which is obviously we haven't talked about that yet, but part of our use of funds will be in there.
It definitely adds to sort of the brand advocacy, and they become shareholders, etc., and great way to create your brand awareness. One of the things you spoke about in your presentation, Bill, was you hinted to it, but M&A sort of acquiring other companies, and I've seen what your use of funds looks like, and that'll come in the offer document on Tuesday. But I know that sort of a significant part, 35-40% of if you raise the maximum amount of 3 mil will be spent on M&A. Can you just give us a bit of insight into that?
I'm going to jump in on this. We've grown a great team. We've got we've got pods with managers and lawyers and conveyancers that work underneath them, etc. For us to scale and do what we need, it's not just a matter of hiring. We've hired 7 new people in Victoria over the last fortnight. So we are constantly hiring right now to grow the team because we know these contracts are on the way, like they're going live very soon. But we also need to acquire other firms. Our plan is, and I've always started the conversations, to acquire several firms to reconvert them to a bond, put our mechanisms in there, and we're not buying the revenue, although the revenue will help, but we're hiring the teams and the people, good people, and installing our technology and our efficiencies throughout those teams.
Yeah, we know that if we buy a local conveyancing firm that's doing $500,000 to $1 million in revenue, our systems are going to make them extremely much more efficient. So there's going to be some synergies there in terms of and creative gains in terms of profit in there, and they're going to be able to do many more files. So even if they're at capacity now, with our systems, they're going to be able to do a lot more files, which will help us as well. We'll have senior people in each state to help us grow those teams. We've already got feet on the ground in all the states that we're operating in. So we're not a platform. We are actually delivering the service. So some people ask that question. Are you guys a platform? You franchise? No, we deliver the service. Full-time employees.
So questions coming in around that.
Yeah.
How many conveyancers on the ground now, and then where are they based? And then the other one that has come in is what is the recruitment strategy? If you're going to increase to 2,000 transactions per month, where will that be? And just a little insight into, okay, we're going to scale. We've got the partners on board, the referral partners, and they're going to come in. There might be a 3-month, 6-month lag on that coming through.
Yeah.
How do you do it? Who are you acquiring? Is it Australia wide, or is it centred? I know you guys are in Melbourne. You can see you in the background there.
Yeah.
Whereabouts will it be, and how we do that? Because that's an important part, right? Getting the right staff.
That's what we need this money for too. This is our growth part.
Correct.
So we're
Yeah.
already hiring now. We've got, as I said, 7 people in the last fortnight we've hired.
And whereabouts is that, Rex? Is that just
Across
Melbourne?
Australia. So we actually have employees across Australia. We've got lawyers and conveyancers across Australia. So currently do. The only state we don't, 2 states we don't have, but we still service those states. So we've got other people in other states within Australia that can service Northern Territory and Tassie, but we don't have people live in those states at the moment.
So you can sort of join the dots there about where we're going to start looking. But there's also some medium-sized kind of what we call probably small to medium-sized businesses in Melbourne and other states that we'll look at as well that have other benefits, that can help us in our strategy. Just to answer that question from the start, so we don't jump over it, but we've got about 30 full-time staff now. And we've also got a team of very dedicated contractors that work with us as well. So most of them exclusively for us. The reason they're contractors and not employees is because a lot of them are mums or have other duties that they need to take care of away from work, and they don't want to take 40 files a month. Maybe they want to take 10 or 20 files. So we pay them on a per file basis, and it's great to have for overflow. As you're growing and recruiting, we obviously want full-time staff where we can, but it's a really good strategy to have for overflow. And some of our most experienced and top performers are contractors, because these people really want to do conveyancing, but they can't work full-time, especially from an office. And we provide this solution for them, and we've been able to recruit some great people that way.
Okay, good answer. Question in relation to both of your experience in acquiring a new company and integrating that into to Bond Property, your processes and your system. I know, Bill, you've got some experience in there. Do you want to sort of run through what you've done previously?
Yeah.
And how you want to do it this time as well?
So I've sold companies into bigger companies, and I've also been there when we've integrated companies as well. More of the latter. I think the great thing about us as a team in total is that, and a lot of our competitors don't have this, is that we've got a lawyer and an ops revenue guy, not just one or the other. Typically, our competitors have got one or the other. So Rex has done, I don't know, hundreds of M&A deals for clients. For clients, and including some of mine. And I've been involved in a lot of them. So, PropTech Group, for those that might know, that play was an M&A, basically roll-up solution. So we bought several companies, and part of my role as Chief Operating Officer was to help integrate those businesses. It is not an easy thing to do. It's not always seamless, but we've got a very clear strategy about how we'll do that, with Rex leading our M&A solutions, and then Mirella Rice, who is a very key player in our business, who takes care of recruitment and the integration of new businesses moving forward. We see that as almost the same thing, because our M&A is almost an acqui-hire kind of approach. So we're not there to buy revenue, we're there to buy people. That sounds horrible, but you know what I mean. We're there to buy talent.
I understand it.
Yeah, we're there to buy talent. So so Mirella and Rex will drive that approach. Rex doing the deals, and then Mirella integrating them into our businesses. We've got a very clear strategy. One of the things that we'll use as well is we're a B2B2C play, and we don't want to compete against our clients effectively, our referrers. So we don't do any advertising above the line. One of the acquisitions that we'll make moving forward, we'll keep their brand, and we'll make that a B2C, more of a B2C brand. And it'll also give us the ability to work on both sides of the transaction. Rex said that there's 600,000 transactions, but that's $1.2 million opportunity, 1.2 million opportunities. Having two firms allows us, it makes it easier to work on both sides. You can't do it anyway, but there's complexity around it. Makes it easier to work on both sides, two separate teams, separate software, and running independently.
Okay. You mentioned earlier that you are profitable. Question in around just for an education for investors that come in as to whether you would pay a dividend, you reinvest it back in the company, and you look for that exit via a PE, a trade sale, or ASX listing. Can you sort of give some insight into what you thought you might be doing going forward, so people understand that you're an unlisted company, and will there be a dividend? How will they get a return on investment? Just to go over that again a little bit more.
I think this is a growth play. So firms like us are about growth, not about profit. If we made a big profit, we'd be doing something wrong, right? We want to be profitable for sure. But the old adage is, if you made $1 profit, that means you've invested the perfect amount of money. Because we're trying to grow as fast as we can, and you need money for that. But you don't want to burn cash, right? And we're very careful. You can see, 2.5 years in to be, a company that's NPAT profitable, growing at 100% a year. I hope that shows that we're very, very serious about keeping our costs in line and growing while we're growing. And we want to continue that model. So the short answer to that is, we don't expect to pay dividends, but we expect a liquidity event within, could be earlier, but within 3 years.
Okay. Question in and around your referral partners owning shares in the company. Is there a conflict of interest there? I sort of don't see it like that. I think it's they're there as owning shares, and their brand aligned with you guys.
Not at all.
Not at all.
Yeah.
It's actually very common, especially in the listed environment, for your big partners to invest in the business.
Yeah. A couple more. Just wanting to talk then about in relation to legal tech. Maybe for you, Rex. It's a space. We've seen prop tech. We've seen all these different types of insurance, fintech, whatever it might be. Your capacity, sort of as the legal expert, and your forum that you're on, and you're quoted in the media a lot. Why there's been such a delay in legal tech sort of embracing the conveyancing industry as such?
I don't think it's just the conveyancing industry. I think it's all industries.
Everyone,
technology. Yeah, I think it's lawyers' time. We make money on time. So our resources and time is very scarce, and we make a lot more money working on a file than working on tech. And my industry, the legal industry, is very time driven and to make money, I suppose. And we're busy, so we've got client work to do. So we just don't have the resources to devote to it.
This is not true of every law firm, and most law firms aren't true. But when you're incentivized by the hour, you're not spending millions of dollars building tech, right? Because
very true. It's a good model, isn't it?
Yeah.
Last question, mainly for you, Bill. Just I know, and there's a question here around financials. Yes, I'll be part of the IM that'll come out on Tuesday. Can you give just a little bit of an insight, Bill, into what we're talking about, some high numbers? I know it's a hard question because there's probably 6 pages of financials in the offer document, but can you give just a bit of a flavour for what's coming through there?
Yeah,
and potentially, sorry to interrupt. Potentially, then you can't put forecasts into the offer document. Can you give a little bit of an insight into the next 3 years as to? I know we've touched on a little bit, but maybe that model of this number of transactions, this many partners equals this many transactions equals a revenue model or revenue number for FY 26, 27, 28 of X.
Sure. So I think importantly, we're growing organically at 90-something%, almost 100%, and that's going to continue. We're not slowing that approach at all. We've got a very good go-to-market strategy now that works very well with our current partners. The enterprise deals that we're doing are effectively on top of that. We think we'll grow, close to 100% without those enterprise deals. But those enterprise deals are built in a way, and these are negotiated through the contracts, that we have an integration into the tech, like I said earlier, so that the leads come through very, very efficiently without the need for someone to make a decision to refer to us, a broker or a real estate agent. Rex did some basic numbers before, but if you extrapolate forward, even just the accounts that we've literally done, not the ones that are likely to come in the next couple of months that are very, very progressed. Just to give you an idea, for those that aren't aware how these deals work, sometimes these deals take a year. It's not talk today, sign tomorrow. That doesn't mean you're doing meetings every week, but we're talking about these big enterprise deals need board level approval. They're not easy to do, and they take time. A lot of them, even the ones that are very close to being done, we've been talking to for 6-9 months, a lot of these. So we expect to be, in the next couple of months to have those delivered. But if you just sort of look at those sort of relationships and you say, okay, well, they've told us that we're going to engage 25% of their network. They do combined about 6,000 settlements a month. So let's call that 1,500 settlements. And then you times that by our average fee, which is about $1,700. And like Rex said earlier, you're talking about a couple of $1 million in monthly revenue within the next 18 months. To give you an idea, July times 12 is 4.2 million. So we're talking about a significant increase in scale. And that's the only reason we're raising capital, because we need to get in front of the service aspect, because unlike pure play technology, you have to deliver a service on every dollar you earn. So we need to build out the capabilities to do so, and not only with extra people, but also with better tech capabilities, so we become more professional or more productive with how we do things.
Can I just add something? Sorry, Tim. It's an interesting thing to look at. So when everyone gets the financials, I invite everyone to go look at. There's a quarterly financials, and you can see the jumps every quarter makes. And that supports what we say, because every quarter our revenues are jumping by a significant amount.
And just to circle back, it's the referral from a trusted advisor, be it your mortgage broker or the real estate agent, that really you guys are centering on. As I buy a property and my mortgage broker or the agent says to me, Tim, do you have a conveyancing person to help? And you don't. And I don't know what the statistic is on how many people don't have something sorted. You take the advice from your broker, be it the mortgage broker or the agent, because at that point in time, it's a small number, 1,700. It's pales in comparison to your stamp duty or what you've just spent to purchase the property. That's really your point of difference, isn't it? You've now got national accounts who are referring across the board into that particular moment to say, hey, here's a trusted advisor, go and speak to Bond.
Yeah, I think everyone's got an accountant or a mortgage broker that they know. I challenge the people on this call to think about who's their conveyancer. Probably don't really have someone. You might remember who you used last time, but maybe not. You might have to search your emails. And so it's not like we're going in against really strong competition each time. Sometimes agents and mortgage brokers individually have got one they like. Most of the time they do. But we've got very specific ways about engaging them and getting their business, national approach. So the clients that are interstate, and then we build through there the transparency. No one provides that. So that's a big part of it for us. And I think it's a very scalable solution, because even though for some of them we do pay a fee, it's only on success. So there's no upfront fee to pay on Google or Meta, millions of dollars a month, and you might not convert. We know that because of to give you an idea, some of the leads we get are from prop tech platforms, and one of them is what's called an offer platform. So when you make an offer to buy a property, a lot of real estate agents these days use a software product for you to do that. One of our competitors was converting those at about 2%. We got to 12% within about 3 or 4 months, and just recently we implemented a change to our process, which got it up to about 19%. So we're talking about almost a 9-10x conversion compared to what our competitors are doing. And we've got a fantastic team, Sam Uplegger, who runs sales, Liam Howard, who runs our customer success team. These guys are, people that are very, very good at what they do and very committed. And we've been able to build great systems to be able to convert those at a better rate. Just a couple more bits of data that you might be interested in. So we close about 20% of those, but what you got to understand is that only about 1 in 4 people that make an offer buy. So really, we're converting about 80% of people that buy. And interestingly, if a mortgage broker or a real estate agent refers a client to us, we close those at about 80 to 90% as well. So it's simple. We've been able to get a cooler lead to the same level of success as a warmer lead, which has been a big win for us. But yeah, when a mortgage broker or real estate agent sends us a client, it's very high. And then buyers advocates, for instance, mid 90% conversion rates because they've got very strong relationships with their clients.
Okay. We're approaching the hour mark. We've done a lot of questions, half an hour plus 35 minutes of question time. You guys have been terrific. Thank you. To the attendees, I remind you that please register your interest or express your interest via the on-market platform. That way you'll be assured to get first access. The guys are raising $3 million. We've got demand far greater than that. So I want to remind you that you need to register your interest, and that way you'll get an email next Tuesday around mid-morning. But thank you to Bill and Rex. We wish you good luck on the campaign next week, and I think you'll have every success based on the scale of the business and the opportunity that you have out there. So thank you for your insight today. Thanks, guys.
Thank you all. Thanks for attending.
Thank you.
Thank you.